Over the past year, I've made over $150,000 a month consistently trading meme coins. Not by just aping into every coin, but by following a simple, calculated system that filters out 99% of the garbage. In this video, I'm walking you through the exact step-by-step route I take if I had to start from zero today, including how I find real opportunities, avoid rugs, and take profits the smart way. If you're tired of repeatedly losing money and refilling your wallet, second-guessing every trade, or just want a real strategy to make 10k a month trading meme coins, this is the clearest path you'll ever see. So step 1 to making 10k a month trading meme coins is to dial in your setup. Before you even think about buying your first coin, you need a setup that doesn't screw you over. In this game, speed is money, and being slow can cost you thousands. But many beginners overlook this because meme coin trading nowadays is easily accessible. A lot of crypto apps and bots have mobile support, but just because it's convenient doesn't mean it's the right move. The more monitors you have, the better. Every second matters. And on that PC, you want to have a Twitter account ready because Twitter is the most popular research platform on crypto, and a Telegram and Discord account, since those two platforms are where you're going to find a coin's community. And finally, you're going to need Solana to trade with and a good trading bot, so let me show you how to set that up. The first thing you need to do is to install the Phantom Wallet extension. And remember to save the seed phrase it gives you offline. That's going to be the only way you can recover your wallet if it's lost. The next thing you want to do is to buy Solana from an exchange like Coinbase or Kraken, and then move that Solana into your Phantom wallet. And then finally, you need to set up Axiom Pro for your trading bot. It's the fastest and most secure trading bot, and it has every single feature you need to stay ahead of the competition. To set this up, go to the first link in the description down below, and it should take you to the sign up page. And when you do, it's going to give you free access as well as 10% off all fees, which is the lowest rate out of any Axiom user at the moment. And from here, you can either use your Phantom wallet or your Gmail to sign up. Once you're here, same thing as Phantom, you're going to want to save your seed phrase offline. It's the only way to recover your Axiom wallet if you lose it. And then you're going to deposit Solana from your Phantom wallet into your Axiom through the button at the top right over here. And make sure you're copying your Solana address, not your perps. And now that we're here, let's go through Axiom and how to actually use its features. So the first thing you're going to do is to head to the poll section right here. And this is the heart of Axiom. It's where every single new coin is going to appear in live time. But without a filter, it's chaos. You can see a bunch of coins popping up in your face every second. So here's how I filter out the noise. You're going to head to your filters on new pairs and make sure Pump and Pump AMM are the only protocols selected. And then you're going to go down here, head to metrics, and make the minimum market cap 13,000. And that's going to be all. No need to overcomplicate things. This $13,000 minimum market cap filter is going to remove the garbage and still give you good entry on any potential coins. So then I'm going to hit apply all. And then the next thing you're going to do is to go to your preset settings right here, the little gear button. And then you're going to change slippage to 30%, priority to either 0.01 or 0.05 depending on the capital you're working with. And then you're going to do the same thing with the bribery. And you're also going to want to turn on MEV reduction. Make sure this is always on. And for your quick buy, make this an amount you're comfortable trenching with. So for me, that'd be 5 SOL. And a cool little trick is notice how the buttons for the SOL is a little hard to press. So what I'm going to do is do 0.00000. And now that the buttons are bigger, it's going to be easier for you to click and to snipe coins. And also notice how Axiom has a wallet and a Twitter tracker. So to get you guys started, I'm going to put down a list of popular wallets and Twitter accounts at the moment for you to track in the description down below, all for free. But I want to emphasize this. Please do not blindly copy trade the wallets I'm showing you guys. It's one of the easiest ways to wash your portfolio. They are for tracking attention only. And speaking of Twitter accounts, if you want exclusive alpha like my keycat call here, where I call a 5x on infinite size, you can see that on my Twitter, so make sure to drop a follow from the description down below. So now that we have the correct setup, don't sell yourself short by missing this next step, because without it, you're going to miss hundreds of 100x opportunities. I used to miss coins all the time until I joined my first alpha group, where I learned how to understand whether a coin had a good narrative or not. And that was when I caught my first $20,000 play. So to make it 100 times easier to make 10k a month trading meme coins, this is what you should do. Step 2 is to find a community or a mentor to trade with you. And if you're trying to figure out this game solo, you're setting yourself up to lose. You'll miss plays, fall for scams, and burn out fast. Be honest. How many life-changing plays have you missed because you're not in a group at all, or you're stuck in one that's farming you? Don't trade solo. You're gonna have more eyes, which means you have a higher chance of scanning good plays. Find a good community. It's gonna make doing efficient research and picking up good narratives a lot more easy. And to do that, you're gonna join a serious group, or at the very least, trade with your close friends. But you want to avoid joining free Telegram groups. Most of them are ran by insiders farming you, where they launch coins, shill them, and then dump on you. And if you want to trade with me personally, I've worked with people like Ko, who I made a video on, who went from not knowing how to read narratives and build conviction to making $3 million on his public wallet. And he's now calling absolute bangers in my group Fortune. But like I said, it doesn't just have to be with me. There's a bunch of groups and people out there on crypto Twitter with good track records that will not only help you progress immensely, but also expose yourself to a strong network. The biggest connections I've made have all originally come from crypto. But even with the right group, you still need to know how to do research yourself to make sure that the calls you're buying are actually good. Step number 3 is knowing how to filter the trash from the real plays. Anyone can find a new coin. Axiom spits them out every second. But if you don't know how to tell what's legit, you're just going to be repeatedly getting rugged, and it's going to be impossible to make 10K a month consistently or even at all. And this is where most traders start gambling instead of trading. They don't check who launched the coin, they join a random telegram, they think just being early is an edge, they ignore price action, and they FOMO into plays. So to start trading the smart way, understand that crypto is an attention game. Your edge is going to be understanding narratives and timing. So let me show you how to understand them. So the most important thing you need to understand, and it's what I've been saying a lot during the video, is narrative. Now, narrative is a pretty broad concept when it comes to crypto, but it centers around 2 questions. 1, what is the story behind the coin? And this is asking, what is the trend or meme that the coin was made around? Is that story something that's gaining a lot of attention at the moment? Or does it have the potential to in the future? If I look through Pulse on Axiom right now, let's say the TikTok lore coin, this thing right here. If I go on the Twitter, I can see that the story behind this coin are AI animal characters that are going viral on TikTok right now. Right here, John Pork. So that is the story behind the coin. Question number 2 is the story unique? Are there a lot of coins that are similar to this? Or is this a narrative you think already has eyes? Or is it a story that doesn't have a lot of eyes right now, but it could in the future? Where can you find a coin story? So like I just did in that previous example, you can get a pretty good grasp of a coin's narrative by going to Axiom and clicking on their Twitter, website, and community, whether it's on Telegram or Discord. Make sure to look through the following and followers list of the coin's Twitter, their Twitter posts, and community updates on the Telegram or Discord. And this process is something that should be done in seconds once you get more experienced. And like I said, crypto's an attention market. A strong story is going to bring more eyes and it's going to raise the price. And when you're reading a coin's narrative, you need to always look for future catalysts. What I mean by this is that if the coin is currently at 10 million market cap, think about why someone would buy at 100 million market cap. If the coin is at 100 million market cap, think about why someone would buy at 1 billion market cap. Always look for future bull catalysts. One great example of this is Memecoin versus official Trump coin. So the narrative of Memecoin was that it was a coin created to support Trump, but Trump never officially associated with this coin. And you can see that when Trump dropped his official meme coin, official Trump right here, at January 18th, there was no reason to buy an unofficial coin of Trump anymore. And what happened? The chart nuked and it's now at 0. Whereas Trump sucked all the liquidity out and had one of the craziest run-ups in crypto history. So in Memecoin, there was no more future bull catalysts. There's no reason to buy an unofficial Trump coin when there's a real one out there. And when a narrative becomes strong enough, it creates a meta. And a meta is the leading narrative of the market. In a meta, there's something called an alpha play and a beta play. Little corny, I know. The alpha play is the highest market cap coin with the most mindshare. For example, when Dog with Hat coin was on the run-up, with coin, the alpha, caused the dog meta. And because of that, beta plays, which you can think of as co-plays pretty much, like Bag and Ninja followed and performed very well. For example, right here, if I pull up the WIF chart, right here, November 3rd up to November 14th, WIF had a crazy run-up from 2 billion to 5 billion. And when I open the Bag chart in the same time period, November 2nd to November 14th, it followed WIF's tail, and when mindshare peaked and the dog meta happened, Bag exploded. But another thing you need to note is that beta plays are not guaranteed to go up just because the alpha is performing well. A lot of the time, beta plays die and never recover even if the alpha sustains its strength. So it's important to manage risk with these. Beta plays are also much weaker when the market pulls back. If I compare the WIF and Bag chart, you can see that when the market retraced, Bag crashed so much harder than WIF. So the 2 key pointers to profiting off narratives is finding attention-grabbing stories and playing coins with similar stories to the leading narrative. But a strong narrative doesn't always lead to a good coin. So to research profitable coins, you also need to look at a coin's community. A coin can't get attention without a community supporting it. That's building hype, buying up supply, and bringing mindshare. So for every coin, you want to look for a strong, cult-like community and look at how much social engagement that the coin is getting. How active are the holders on Twitter? Are there any good KOL? Are there any powerful influencers pushing the coin? Closer the community is to a cult, the better. And it's also a good sign if the coin and community have been around for a while and they've survived many price drawdowns. A perfect example of this is Farcoin. If I go to their Twitter, they're followed by a lot of my mutuals, and ever since launch, they're still getting an extremely high amount of engagement. And you can see on the Farcoin chart, they've survived so many drawdowns. And as a result, the Farcoin is one of the strongest coins in the market right now. But even after you're able to find a good coin through research, you can't buy in blind, which is why you need to understand price action. And price action is the raw, unfiltered data of how buyers and sellers are interacting with the coin at any given moment. It's the pure movement of the price on a chart. And this price action is usually the first indicator of interest in a coin. For example, if I'm sitting on Axiom and I see a new coin getting volume, it's in my best interest to do research on why that narrative is getting volume. And when you pull up that chart, you want to ask yourself, is the coin up by multiples? And if so, it's probably best to wait for a significant dip before you buy. Pretty much every meme coin experiences multiple 50 to 80% drawdowns. But of course, if you're early enough on a narrative that you know is going to get a lot of attention, it's not necessarily wrong to buy at the top. But for example, if I look at this coin that ran yesterday called Penguin Tariff, which my group made $127,000 on, and I zoom in, there were multiple drawdowns from start to end before it exploded. So if the coin does have a significant drawdown, assess the community and see if they still believe in the narrative despite the dip. Patience is extremely important when it comes to investments, not only after you buy, but also before. Finally, you can use price action to spot organic versus manipulated pumps. And the most common ways price action is manipulated is if it's heavily suppressed or heavily bundled. And to figure out if it's manipulated, Axiom is going to be your best friend. So for example, if I look at the pull section and I open up AI Dog Coin right here, you can see these pumps with almost no volume. And changes in price like this without volume is one of the easiest ways to tell if a coin is bundled. And another one is if a chart is heavily suppressed. And these are charts that go up but face extremely heavy rejection with very high volume at a certain range. And what happens? There's not enough buy volume to support the insider sells and the coin just nukes. So these are two types of price action that you want to avoid at all costs. And speaking of avoiding, although we now know how to find coins with value, the final check we need to do is legitimacy. And in order to check the legitimacy of a coin, like I said before, Axiom is your best friend. It shows you everything you need to watch out for. So check for bundled wallets with this little symbol right here, which is the hidden dev supply that's ready to be nuked on your head with. Be careful of the insider and sniper holding. See if there are any grammatical errors on the Twitter and website. And Axiom has a really cool feature that tells you if a coin's Twitter name was changed in the past. And it's going to show up as an orange Twitter logo like this. And what that usually means is that the coin's Twitter account was recycled and it was used in a previous scam. So if you follow all these steps, you're going to start winning way more and be on your track to 10K a month with meme coins. But without this next step, it's only a matter of time before you blow your account. Step 4 is risk management, and this is where most people tune out. If you think finding good coins is what makes you money, you're wrong. It's how you manage your money that decides whether you stay in the game and make millions or get wiped trying to chase one more pump. And I learned this the hard way. When I was 18 years old, about 2 months into trading meme coins, I turned $500 into $104,000 in 2 weeks. I was still in college and I genuinely felt like I was him, like I was at the top of the freaking world. I could have bought a car, paid my tuition at the time, literally anything. And then not even a month later, I shot that down to $20,000. Not because I didn't know how to find good plays, I did. I was calling bangers left and right. But my risk management was awful. So I started to implement these next steps to start keeping my money and get to where I am now. The first thing you need to put in your head is to only trade what you can afford and are willing to lose. Now these two sound very similar, but they're actually two completely different things. And to understand this, you need to know the two types of capitulation in crypto, and that's price-based capitulation and time-based capitulation. In price-based capitulation, a trader sells because the price of the coin has reached an extremely low point, which influences them to no longer believe in the narrative. Or their position is just so down bad that they have to cut losses. And again, if you only invest an amount that you're willing and you can afford to lose, it is extremely hard to undergo price-based capitulation. And that's because you don't have to cut losses if the price goes down, even if your investment goes to zero. It's not going to hurt you because that amount is insignificant relative to your portfolio. And in meme coin trading, this is especially useful because so many times we see coins go to zero, revive, and then pull crazy multiples. But with that being said, you should take this advice on a trade-by-trade basis, and there are definitely times when cutting losses is the best decision. For example, if the project rugs or if there's legitimate bad news. In time-based capitulation, the trader sells because they simply get impatient regarding the price action. For instance, look at the Dogecoin chart. Now, I'm not saying that the random coin you're holding in your wallet right now is the next Dogecoin, but just think about how many people got shaken out in these boring periods of price action. So out of this, there are two key takeaways. One is to always have a thesis and plan when you make a trade. Whether you're flipping new coins on Axiom or you're sizing into a mid-cap meme coin, always remember how long you might have to stay committed to the trade, in both the best and worst case scenarios. For example, let's say I currently have a large chunk of my portfolio sized into Pepe. Before pressing buy, I knew exactly what I was getting into, the potential drawdown I'd have to hold through, and how much money I was willing to put into the trade. And that leads to number two, which is never put too much of your liquidity into one play. This is gonna lead to you selling early out of impatience or seeing other coins outperforming your current play. And for that reason, you should always have enough liquidity available in your portfolio to buy the next play, even if you're holding another coin. For example, even if a lot of my money is allocated into a large coin like Pepe, I still have enough liquidity to size into another coin if I need to. And what can really help with this is moving your profits into a different wallet. So I trench with about 50 SOL in my wallet usually, and whenever this wallet goes over this 50 from hitting a good trade, let's say I make 50 on a trade and it becomes 100, I just move that money out into a different wallet. This way, I'm physically limiting my risk. You want to make it a habit to not have to redeposit your money from your treasury back into your trenching wallet. Because for me, this 50 SOL is all I need to make money, and of course, you can adjust that amount to your portfolio. And with risk management, you need to remember that not every play needs to print. Patience always outperforms. So if you manage your risk properly, you can pick a good coin. But most people still lose money because they mess up the part that comes next. Step 5 is execution, and this is where everything you've done up to this point either pays off and you get to that 10K a month, or it goes to zero. Because finding the right coin, managing risk, doing research, none of it matters if you don't know how to buy or sell the right way. Let me explain. Not executing properly is one of the most expensive mistakes people don't even realize they're making. It's not even being wrong about the idea itself. It could have been an extremely good coin, but they either round trip it all the way down because they froze up, or they panic sell way too early and leave thousands. So stop doing that and let me tell you how to actually execute. The most important thing you need to know is to never sell at once. You want to always average in and out of your trades. So this means sell 10 to 25% of the time when you're significantly in profit to the point where it's going to affect your portfolio, or when a catalyst hits. And that can be when an influencer tweets about the coin, or a wallet with a lot of copy traders buys in, which is exactly why I mentioned before to never blindly copy trade those wallets that I sent you. If I use my $12,000 trade as an example, you can see that there's multiple buys and a bunch of different sells right here. Because this way, I'm able to secure my initials and some profits, but I still have some stake left in the coin in the case that it does go higher. Or if it rugs out of nowhere, I still walk away with money. And I actually recorded that trade live, so check out my live trading video if you want to see how I executed it. Now you know how to research a coin, manage your risk, and execute clean trades. But that's only half the story, because if you're not doing what comes next, you're stalling your progress without even realizing it. And step 6 is journaling your trades. And yeah, I get it. It sounds tedious, like something that doesn't make you money. But I'm telling you right now, this is the one habit that separates short-term wins from long-term. Because if you're not reflecting on your trades, you're going to keep making the same mistakes, forget the trades that actually taught you something, chase the next play thinking it'll fix the next one, and have no feedback. So if you spend 5 minutes now, you're saving years of pain later if you journal the right way. So after every trade, I'm going to ask myself these 4 questions. 1. What was the coin's narrative? 2. Why did I buy where I did? 3. Why did I hold for as long as I did? And 4. Why did I sell where I did? And once you've answered them, analyze and reflect on what you could have done better for each question. I'm not a perfect trader, and even I have moments where I look back and I realize I could have executed this better. And by answering these questions, you're going to know what you did wrong, what you did right, and what you can do better next time. And this is going to tell you where you are as a trader in terms of your skill. You're going to know your trading style, and if it's working for the current meta the market's in, it's going to keep you grounded and help you look at things from a more objective view, and it's going to give yourself room for improvement. But there's still one thing that decides whether you actually last in this game or burn out like everyone else.
Step 7 is to change your mindset and trust the process. Understand that making 10K a month trading meme coins isn't a fast process. You don't get rich from one coin. You get rich by staying in the game long enough to build an edge that compounds. And this is where most traders fail, even though they were great traders, because they never gave themselves the space to grow. Without the right mindset, even the best traders will blow up the account after one bad play, revenge trade trying to make it back, jump from coin to coin hoping for the next pump, never give enough time to actually improve, and quit the moment it stops being fun. So instead, adapt the mind and start trusting the process. Here's what I mean by that. 1. Markets always evolve. You need to adapt with them. What was working during animal meta no longer worked during AI meta. Next, long-term mindset always wins over instant gratification. I have so many friends who became millionaires overnight off Trump coin and then lost it all the following month because they got cocky. And also, every trader has losing streaks. What matters is how you handle them. Like I said before, I turned $104,000 into $20,000 as an 18-year-old, but I was able to learn from that experience and gradually get to where I am now. And as long as you stick to these fundamentals, you will outperform 99% of crypto Twitter. Now you know the fastest way and the safest way to make 10K a month trading meme coins. If you want to trade with me and people actually catching these plays in real time, apply below. No fluff, just a tight circle that trenches daily and wins together. Links in the description to apply. Thank you for watching.